Hold on to your hats. European stock markets look set to skid lower after Federal Reserve Chair Jerome Powell warned that equity prices are trading at lofty levels. But here's where it gets controversial. Are we witnessing a necessary market correction or an overblown scare? London's FTSE 100 is poised for a 0.2% drop at the opening bell, with Germany's DAX potentially down 0.3% and France's CAC 40 sliding 0.4%, according to IG estimates. Across Asia overnight, most major indices fell back, while U.S. stock futures barely budged as traders weigh whether Powell's comments signal a shift in central bank tolerance for high asset valuations. When asked about how much froth the Fed can stomach in markets, Powell didn't mince words. By many measures, equity prices are fairly highly valued, he said. In plain language, that means stocks may be priced for perfection, leaving little room for disappointing earnings or other setbacks. For beginners, imagine buying a concert ticket at premium prices, only to find the band playing on a shaky stage. If performance falls short, ticket holders feel the sting. Meanwhile, in a surprising pivot on foreign policy, U.S. President Donald Trump declared that Ukraine could regain every inch of territory seized by Russia. With time, patience, and the financial backing of Europe and especially NATO, restoring Ukraine's original borders is very much on the table. He posted on Truth Social. This statement marks a dramatic departure from his previous position and has prompted intense debate. Is it genuine support for Kyiv or simply political theater ahead of next year's elections? Trump also met Ukrainian President Volodymyr Zelensky at the UN General Assembly, publicly urging NATO members to shoot down any Russian planes that violate their airspace. And this is the part most people miss. Such a stance could risk direct clashes with Moscow, raising the specter of escalation. Back in Europe, eyes will turn to two key economic reports due Wednesday. First up is Germany's IFO Business Climate Index, a respected barometer based on surveys of roughly 9,000 managers gauging current conditions and expectations. Later, Switzerland will publish its Economic Sentiment Index for September, which aggregates confidence readings from consumers, retailers, and manufacturers. Both figures offer early clues about the health of Europe's engine for growth. So here's the question for you. Do you think Powell's warning will trigger a broad sell-off or simply cool overheated sentiment? And on the world stage, is Trump's tougher line on Ukraine a sign of genuine commitment or a high-stakes gamble? Share your thoughts, agree, disagree, or challenge these takes in the comments below.